Although making resolutions to improve your financial situation is a good thing to do at any time of the year, many people find it easier at the beginning of a new year. When you read a lot of finance books and blogs, you come across a ton of different personal finance tips and tricks. This can make personal finance seem like a massive, overwhelming, and complicated topic, but it's really not. It's best to get started as soon as possible on good financial habits. Luckily, today we present to you our top 10 financial advice and tips to get you started. Starting our list with tip number 1, get paid what you're worth and spend less than you earn. It may sound simple, but many people struggle with this first rule. It's easy to know that you should be spending less than you earn. It's a lot harder to actually do it. However, if you want to escape the paycheck-to-paycheck lifestyle that so many others live, you need to spend less than you earn. This is one of the most crucial but basic personal finance tips ever. No matter how much or how little you're paid, you'll never get ahead if you spend more than you earn. Often, it's easier to spend less than it is to earn more, and a little cost-cutting effort in a number of areas can result in savings. And it doesn't always have to involve making big sacrifices. In order to do this, you need to track your spending. You can do this by either writing your purchases down or by using a free personal finance app. Tip number 2, learn to budget and stick to it. You might hear the word budget and cringe a little, but you shouldn't. Budgeting is not hard, and it doesn't mean you have to stop doing things you enjoy. Budgeting is simply creating a plan for your money, so you have a better idea of where it's going every month. A popular and effective way to budget is with the 50-30-20 rule. How it works is 50% of your income goes towards your necessities, bills, food, housing, etc. 20% of your income goes towards savings, and the remaining 30% you can use for whatever you please. This is a nice and easy way to break down your paycheck, but you might need to adjust it a bit to fit your lifestyle. So find a budget you want to try, get started, and stay with it. It's that simple. If you want, Washington recommends you surround yourself with visual representations of your goals. So if you're saving for your next international trip, you can put up pictures of your dream trip to keep your goal fresh in your mind. Next is tip number 3, breaking down your income and expenses. Breaking down your income and expenses to dollars per day is a relatively simple exercise if you already have a budget. Take your monthly income or expenses and divide by 30 days for a month, or divide by 14 for a bi-weekly budget. Like this. You make $2,500 a month, which is about $83 a day. You pay $800 a month for rent, $27 a day. You pay $200 a month for car insurance, that's about $7 a day. Everything else, food, phone, gas, etc., comes to $750 a month, which is about $25 a day. That means you're left with $24 a day in spending money. Want to buy a new $10,000 car? That's about 416 days worth of your spending money. This will help you see how far purchases are going to set you back and affect your spending ability. Tip number 4, pay yourself first. Pay yourself first is a popular phrase in personal finance and retirement planning literature. It is also an investor mentality that means automatically routing a specified savings contribution from each paycheck at the time it is received. So why not just pay yourself at the end of the month? That's a lot easier, right? Many personal finance professionals and retirement planners endorse the Pay Yourself First scheme to be a very effective way to make sure that you continue making your chosen saving contributions month after month. It removes the temptation to skip contribution and spend the funds on expenses other than savings. If you are using the Pay Yourself First method of personal finance, you can choose to put your money in a range of savings tools, depending on your financial objectives. Next is tip number 5, have a financial goal. Financial goals are savings, investments, or spending targets you hope to achieve over a set period of time. The stage in life you're in usually determines what type of goals you wish to achieve. If you want to accomplish financial goals, you need to figure out what goals are important to you first. Having a clear goal can keep you motivated and help you come up with a plan to reach that goal even faster. Now, don't think that you need to set outrageous goals. If this is your first time thinking about personal financial goals, start off small and work your way up from there. I'd suggest coming up with a few different goals in each of these categories. Whether you want to save $1,000 for the next 3 months, buy a house next year, or investing on a business after 5 years, it's all up to you. Tip number 6, stay out of bad debt. Debt makes you owe someone money, and if I've learned anything from gangster movies, you never want to owe someone money. However, not all debt is necessarily bad debt. So what's the difference? A simple rule is if it increases your net worth or has future value, it's good debt. Some people will say there's no such thing as good debt, and while I mostly agree, I also can't deny that some debt can be beneficial in the right circumstances. On the other hand, if it doesn't do that, and you don't have cash to pay for it, it's bad debt. Bad debt is any debt that acquired through purchasing something that's going to lose value and generate zero revenue. Examples of good debt are taking out a mortgage, buying things that save you time and money, buying essential items, investing in yourself by borrowing for more education or to consolidate debt. Each may put you in a hole initially, but you'll be better off in the long run for having borrowed the money. Some examples of bad debt would be credit card debt or an auto loan. Next is tip number 7. Have an emergency fund. Now, this is a very important financial tip and something we should not take lightly, especially on what most of us have experienced during this COVID-19 pandemic: job loss and funds for hospital bills. Regardless of what your priority is, you'll want to have some easily accessible liquid funds. Maybe you're focusing on paying down your student loans and you're not concerned with building a hefty emergency fund. That's fine. You don't absolutely have to save 6 months of expenses, but you should save for at least 3. You can't predict any emergency, but you can prepare for one. Here are some common financial emergencies. Tip number 8. Know your net worth. Net worth can seem like a tricky topic, but it's quite simple. Your net worth is how much money you are worth. Net worth is essentially the sum of all the assets, what you own, versus the outstanding debts or liabilities, what you owe. If you add them up and the result is a negative sum, you owe more than you have, and have a negative net worth. The first reason net worth is so important is that there's no better way to accurately measure your wealth. Second, it's critical in tracking your progress over time. If you understand your net worth today, you can set objectives for how you want your net worth to grow over time. Tip number 9. Side hustle to have more money. Money, who couldn't use a little bit more of it? Whether you're saving for a down payment, planning a wedding, trying to pay off debt, will those student loans ever go away? Or putting some money aside for a rainy day, a little bit of extra cash can go a long way. So why not start a side hustle to supplement your income? Don't worry, you don't have to sacrifice all of your free time to start a successful side hustle. One of the big advantages to side hustling is that you can do it when you want and as much or as little as you want. The best advice I can give you is to start. Use any extra time you can find and make a little bit of progress every day. Soon, you'll be addicted to the side hustle lifestyle. Here are some ideas of side hustles you might want to consider. And down to our last one is tip number 10. Start investing. Investing is important, if not critical, to make your money work for you. You work hard for your money and your money should work hard for you. Investing is one of the best ways to increase your net worth, but a lot of people stay away from it because they're scared of losing money. So instead of investing, they keep their money in a savings account. That's great, and you should have some money in a savings account for emergencies, but the truth is, money in a savings account loses value over time. There is a popular English proverb, you reap what you sow. It is essential that you sow so that you can reap the benefits in the future. Here's the list of the best investments you may want to start. Keep in mind, this won't be easy. Although there are only 10 tips, if you're not already doing these things, it's going to take time to build up these new habits. Simply reading these 12 personal finance tips and then closing this page is not going to help you. You need to put in some more effort than that. Okay, that is it for today's video. I hope you learned something valuable today. Do not forget to hit the like button and subscribe to our channel District 10 TV for more videos like this. Thanks again for watching, and see you in our next video.